Man versus machine. Can a human beat a machine at investing?
Take a look at the environment for a UK retail investor and the tools that they have at their disposal, finding out what's happening in the market, and then based on that, can your AI chatbot invest for you?
You can ask AI to do everything at the moment. Obviously, it's not a silver bullet, but we wanted to see what AI would come up with and how we could then construct it based on active management and where we think AI is missing a trick.
Maybe just talk a bit about what the rules were in terms of how you prompted AI and got to this position.
Yeah, so we gave it an idea of market conditions. We asked it to provide a summary of market conditions, and then we built a portfolio based on constraints. So long only, no leverage, maximum 50% in one ETF, 20% in one stock, and 80% needs to be in equities with 20% in cash or cash-like bonds. And then the weightings will be across different asset classes and sectors. And yeah, the prompts are sort of on the screen there, pretty much word for word what we did.
All right, so really basic, just those two prompts.
But yeah, this is a disclaimer that obviously this is not investment advice. It's purely for educational and entertainment purposes. And do not use this as investment advice because we are not giving any investment advice here whatsoever. Right, should we go into the portfolio?
Yeah, so I'd love. So after you gave it those two prompts, I'd love to see what it spat out for you.
So this is the AI portfolio. Quite basic in terms of the number of positions, but I think what caught my attention is it's obviously going for a world equity position, which is predominantly US based. It's understood that we're in a period of geopolitical turmoil based on the macro summary. So it's added BAE Systems, Lockheed Martin, two huge defense companies, as well as decent positions in emerging market equities, which are quite well priced and has got a significant tailwind at the moment in regards to the economic outlook and with regards to, I guess, the sort of de-dollarization trend in the US. I think what caught my surprise in particular was it's got something like 15% in clean energy shares, if you look at the pie chart, which is pretty substantial. So a lot of clean energy, which is something that we were surprised about, given just the weightings in this space, given the sort of volatility which has been presented in the sector, and given the fact that this trend has reversed somewhat in the past couple of years.
Yeah, I think taking a look at the portfolio that AI came out with, one, I was impressed. I think obviously synthesizes a lot of information, and so it's read a lot of model portfolios. So it starts off very general. So it's almost well diversified in the ETF space, not taking a particular position, but then based on, I think, a lot of recency bias in the defense space, it's picked out Lockheed Martin and BAE Systems. I think that is what we're going to probably watch each week. We're going to not try and tame the AI too much, let it pick stocks and see how it performs versus us, where we then take the AI portfolio and try and manipulate it slightly. So picking Lockheed Martin, BAE Systems, and Next Era Energy. Next Era Energy is I was surprised to see that. Wasn't really familiar with the company until ChatGPT suggested this, and took a look at it. So it's the largest electric utility in Florida. So it's got 8 million customers, and what they do well is actually when natural gas prices spike and people switch from gas to coal energy, Next Era typically do well.
Yeah, I think with that being said, I mean, obviously decent cash position there as well. It's used the maximum amount of cash. I think given the fact that markets are at quite highly priced as we both mentioned. So I think that's why it's gone for sort of a max cash position, waiting to deploy it when it sees valuations change. And I think we should probably go onto our portfolio now, which is obviously we've got one which has got some more positions in it, but the composition is broadly, I'd say, quite fundamentally different. The asset allocation is the same, so 80% equity, 20% in cash. We've gone for much more granular positions. So we've got 25% of the portfolio in US equities, 8% in emerging markets. We've also got quite a chunky UK position and a European equity position, and that's mainly driven by valuations. We've got a little bit in NASDAQ as well to sort of spice up our US position, add a little bit of technological bias towards the portfolio. European equities as well. We've seen really strong performance there, and we think there's a decent amount of tailwind behind that position, particularly around the stimulus spend and valuations being attractive. The Chinese one is also a little bit of a diversifier in these portfolios. Another region which has been undervalued relative to the US for a number of years, and yeah, something that could do well potentially. There's a strong sort of long-term growth outlook in these portfolios. In the China region specifically, I would say, based on its valuations and its potential outlook. Another area is defense. We've got a ETF which is basically a pure play defense ETF. Around 60% of the exposure is in US defense companies. Obviously, we've seen a huge trend towards conflict over the past few years. And if that continues, we're likely to see those companies benefit from that situation. Gold is another position where we see good diversification benefits, which I'll talk about a little bit later. And Shell is sort of a pure play on oil and geopolitical conflicts if the oil price rises.
Yeah, so I just wanted to, I think we didn't really get to speak too much about it in the beginning, was that this is our response to the AI portfolio. So AI has gone for positions in specific positions in Lockheed as well as BAE Systems. Personally, and that's something I've spoken about a number of times, given the big beautiful bill, prefer to take positions in Huntington, General Dynamics, and Auctus, looking at the shipbuilders as the key beneficiaries in that defense space. So really what we've got now is, instead of taking the individual positions, we're taking a broader defense ETF position. And the portfolio from AI missing, I think, the main diversifier in gold. So that was an obvious choice for us to make, is to add gold to the portfolio. And the other enhancement is that specific position to Chinese media and tech in the Crane Shares K-Web ETF. A lot of interesting sort of fiscal stimulus happening in China. That market's well supported, and there's quality and momentum within that ETF. So those were the main changes that we wanted to make to the AI portfolio. And yeah, now we can have a look at those side by side. So I mean, what stands out to you there, Aaron?
Yeah, I mean, we've obviously taken much more granular positions. So we've gone for geographies a lot more. They've decided to put it all in the world ETF, which isn't necessarily a bad thing. The world ETF has done pretty well over the past decade or so, but obviously there's a huge bias towards the US. We felt like it was an opportunity for us when we saw the allocations towards the world being so high. We thought, right, let's go into something a bit more granular and look for more specific opportunities where we see valuations are trending to be more palatable than perhaps some areas of the US, which are trading at quite frothy levels. And I think we've gone for thematics, but at not such a strong level that AI has gone. I think they'll look at a theme and really lurch towards it. I think that's what AI has done, and we've identified some themes, but we've understood that with thematic positions, you take a huge amount of sort of sector risk. So, if there's a huge decline in the defense sector, let's say, then those positions will be hit hard. Same with the clean energy sector. So, it's important to understand that that's quite a specific risk towards a specific sector. So we understood that, and that's why we're quite, I'd say, more diversified than the AI has been.
So this is kind of our week one. This is our foundation phase. We've prompted this as the core portfolio. What are we expecting to do now? Each week, what are we going to be doing?
Well, we'll have a look at how the portfolios do. And what we're trying to do is essentially see how AI does, see how we do, and then prompt AI to make any changes after giving it a sort of a macro summary and see what it does, and see if it makes interesting investment decisions, or if it sort of makes decisions without putting things into too much context or without understanding risk dynamics. So be quite interested to see how it does, and also how we manage risk in our portfolios, which, if I bring up another slide here, this is kind of an idea of how we got to some of our positions. We sort of looked at correlations between asset classes. And
so you've taken the AI portfolio, put it into a correlation matrix, and then tried to optimize it.
Well, we've looked at general general indices here, and commodities, gold, and property. So we've looked at the correlations between those and said, right, which are going to give me the maximum amount of diversification, because we're looking for areas which are actually red on this chart to add to the portfolio, because the best sort of portfolio is one with lots of combinations of non-correlative assets. So if you've got one which sells off, another one won't be as badly affected. And if I take gold, for example, and its correlation to the S&P 500 over, I think this was over a 3-year period, it's 0.07. Obviously, 1 would be the maximum amount of correlation moving in exactly the same direction. You've got that, obviously, you know, the individual securities are 100% correlated with one another. That's why you've got a 1 for, you know, the S&P 500 and the S&P 500. But securities which have lower correlations add diversification to the portfolio. So that's something that, you know, went through my mind when constructing this portfolio, you know, between the two of us.
All right, good stuff. All right, so I think trying to keep it fair, we're going to give it the same 2 questions each week. One, give us a market update that's relevant to a UK investor, and 2, based on this information, are there any changes that you want to make to the portfolio? And we want to try and limit that to a 20% weighting change.
Also, time frames are very important. You know, there will be periods, potentially over a week or a month, where AI might do well, might do better than us, but we're looking obviously for longer term performance. That's the best measurement of a portfolio manager and active portfolio management.
Yeah, I think there's something here is that this is really just an experiment in investing, and we're not looking to trade the portfolio. And interested to see how we perform, I guess, against AI. And really, it takes a look at what any sort of person off the street, if they were to go and speak to ChatGPT, what portfolio it would generate for them with some very basic prompting.